All right, people, we just had our first trading day of 2024. And the question now is, where's the money going? Where's the money flowing? That's what we're going to talk about on today's Stock Market Brief Show, where we navigate the financial markets through the lens of technical and financial market analysis. If you haven't done so already, make sure to hit that thumbs up. It's greatly appreciated. That's how you sponsor this episode. Let's get into it. Alrighty, I don't want to waste any time. That's why I did that quickly. Hopping into the 10-year yield. So we talked about these on yesterday's video. If you haven't watched yesterday's video, make sure you watch yesterday's video because it goes into a little bit more detail. Now, we're starting to see a little bit of a bounce to start the new year. Does that mean up, and away? Not necessarily, but it's something that we're going to continue to watch. We've been talking about that price momentum oscillator, how it's starting to curl back over. Still well below zero, but it's still something to pay attention to if we get that bullish crossover. Because when we have these bullish crossovers, we've seen times where the 10-year yield started to rise. And the reason why I find that to be important is because when the 10-year yield rises, and when the dollar rises too, that's when pressure can be placed on markets. Let me show you. What was the number two performing asset over here on my screen was the 10-year yield up 2%. Not too far down from that, we had UUP, which is the dollar. So both those were in the green, which happens to make a lot of stuff in, obviously, the red. Down there towards the bottom was technology and the Qs and the miners, right? So heavier beta names pushed lower to start the year. Now, if we look at the side of the list, up and away, we had that Bitcoin, which we'll talk about momentarily. He had healthcare, utilities, consumer staples. So it seems like a quick rotation, at least early on, right? It's too early to tell. One day doesn't make a trend, okay? It could start a trend, but it doesn't necessarily mean that it is a new trend, okay? We don't know that yet. So don't pretend like you do, all right? Yeah. Let's look at the Bitcoin to gold ratio. This is known as the cellular to shift tool, which is something that I put together quite some time ago and have its own separate video on how you can use this specific indicator. But what I found out was when you map and measure the rate of change, the 4-week rate of change between Bitcoin and gold, when it crosses up through zero and you break above the prior week's high, it's a buy signal and a buy trigger, and we've seen some big moves. And when we get crossed down below the rate of change of zero and we cross down below the prior week's low, that is the sell signal, sell trigger, okay? And we've seen actually every big sell-off in Bitcoin dating back all throughout its history has caught all the big drops. And you can see up until recently we had a lot of chop whipsaws, but it did happen to catch some big moves. And most recently, we caught this one from 27,000 to 30,000 range to all the way up to where we currently are now. Now, the reason why I'm bringing this up now is because Bitcoin's been on a monster tear. There's, I think, a lot of news about it going on right now. I'm not going to get too much into that, the regulations and so forth, because I'm not too educated on it. But what I'm starting to notice is the rate of change is starting to deteriorate. So it hasn't crossed down and had a closing. It has to close the week, right? Close the week below zero line. And then on top of that, we have to close below the prior week's low to get the official trigger. So I'm just calling it out early because there's times where it can cross below, but we never get below the prior week low. And then it was a false trigger. There was no trigger. We've seen that 3 times here, at least on this dating back to 2021. Okay, so we'll continue on. We did mention healthcare as a very good looking yearly chart, how we had the low, a higher low, and then the inside trading candle right here. And it was just kind of, compressing, right? We expanded and we contracted. And to start the year, well, that was one of the top performing sectors. So is this telling us, hey, this could be one of the big players where we get rotations and a nice breakout, and this is just the early start? Well, it's a possibility. So what we can do is we can apply a year-to-date anchored VWAP, and you can see it blast it off to start the day on the 5-minute time frame. We bounced from that level. We kind of undercut it a little bit and recouped. So what you want to see is prices stay above that year-to-date. If we get back below, well, watch to see if we cross back above. If it starts declining, if the year-to-date anchored VWAP starts declining, make sure that you want to see, strength and price, recoup to see this start going back up again to potentially see it carry off into the atmosphere. Now, what would be, some names? There's a lot of names within the healthcare industry. There's a lot of different sectors industries within the healthcare industry. Here's one that I just randomly brought up. It's a large market cap name. This was one of my trade ideas actually kind of a while ago. I think it was back here around this time, and it was wedging, and it broke down from the wedge, but it's still kind of wedged out if anybody was watching that. But we had that positive divergence building, and we're starting to see a little bit of strength. The 20-period moving average is carrying back up. The 50-day, you can see the 20 and the 50 are getting very coiled up right here, and we saw that kind of explosive move. So we contracted, and now we expanded out from that. The 53 price looks like it's been kind of an area of resistance. Like we closed on it on that big volume day. It acted as resistance. It acted as resistance again, and then we closed just under that level. So it doesn't necessarily mean you enter into it right away and then it goes up, but this could be one to watch if we get some more tightening up, or have a stop loss and trail the 20-day, and maybe this thing goes off. Overall, though, we're in a pretty significant downtrend, right? In a very short period of time, it went from 70 down to 50. Actually down to 40s handle, okay? And we're below a declining 200-day moving average. So you got to understand the trend is still down, but we're trying to recoup that trend here in the very near term, okay? So if you want to get a little bit more intricate on that, you just apply a year-to-date anchored VWAP. If it gets below it, watch out. If it gets above it and holds above it, let's continue to watch it, try to build some momentum. If you take a look at consumer staples, just on the 5-minute time frame, you can see here we also started up, more of a safety trade. Where's the money flowing? Well, it's holding up above that year-to-date anchored VWAP. So that's a good sign so far for this sector on a year-to-date perspective. If we get below it, it's still inclining at this time, and it's only been one day, right? A lot can change in one day. We can be down here tomorrow. We don't know, okay? But at least you have a level to watch going forward to really determine, the psychology of where market participants may be, happy to get more, buy more, or potentially, cross below it. And then all of a sudden the average buyer year to date, even on a big up move, goes underwater based off of volume. And then we might see a continued sell off. So you'd want to see that level recouped. If you take a look at utilities, same thing. We saw a big move up, consolidate. We bounced from that year to date anchored VWAP and we started moving higher. Now this year to date anchored VWAP, it's also the week-to-date anchored VWAP. It's also the quarter-to-date anchored VWAP. And it was also the daily anchored VWAP, right? So just keep that in mind moving forward as time progresses. Now, technology sector, that was the one that was hit the most, right? We started with a nice big gap down. We came up, we tried to recoup that year-to-date anchored VWAP, daily VWAP, et cetera, but we broke down even further from it. And towards the end of the day, we started to see a little bit of a rally, but still the sector remains below the year-to-date anchored VWAP. So this could be one to potentially watch, that if we get back above it, right, and we can hold above it, and something like that, where we do something like that, and then you can anchor VWAP to the year-to-date low and see if that pulls back and that level can hold, and that right there could be a setup for a potential move higher in technology. Despite seeing, obviously, it's been on a long run and it needs to consolidate a little bit, so just be aware of that. If you look at the heat map, Apple was the one that really drove the markets to the downside today. That's the largest market cap name. It was down 3.58% on some weird news, right? And Apple shares fall 4% after Barclays downgrade. But if you look at the downgrade, this is like the most pointless thing in the world. It went from 161 to 160. Yeah, okay, cool. Yeah, so the 11 sectors, when you take a look at it like this, technology was down towards the bottom. We definitely had a more of a risk off type day. Consumer staples, utilities, healthcare led the way. That is much more of a risk off to start the year, but that doesn't necessarily mean that's how it's going to continue. So we just want to be mindful of that. If we take a look at how the S&P 500 performed within its daily expected moves, we actually opened outside of the daily expected move. And when that happens, remember, dynamic hedging has to take place. And this is where a lot of volatility could kick in. When we pushed down further, we came back up. It acted as a level of resistance, right? As we had to restructure all, the money that made up this risk of range right here was wrong. And then we started to push back from it, almost tagging the lower weekly expected move on day one. And then we started pushing back up below that 5-day moving average. So what is the new daily expected moves going into tomorrow? Going into tomorrow, we have 4764, which is actually below the 5-day moving average. The 5-day moving average is starting to flatten out. Remember, the market moves in 4 different stages, right? Accumulation, markup, distribution, decline, and then back to accumulation phase. As of right now, we went to markup. It's still kind of inclining, but this over here on the price action could be potentially distribution. So if this starts turning down and it holds as a level of resistance, boom, guess what? Then we go into the decline phase and we have to wait and be patient for prices start to turn back up. So if you want these levels on your chart, just download the chart deck. It's free to do so. If we take a look at gamma exposure levels for the SPX going into tomorrow as it stands right now. Now remember, the SPX that I'm looking at when I have the gamma levels is SPX 500 index, but I'm using OANDA if you use TradingView because it gives a little bit more of an accurate reading for these specific levels. Guess what? We're right by the gamma flip level. So if we start pushing from that, we're in negative gamma territory, but we closed basically in positive gamma territory, like right in that area, right? So where do we close? We're close 47.50 and 30 cents above. So technically positive gamma territory. Local support going into tomorrow, 46.90. Local resistance still remains at 4,800, and the call wall has grown up to 48.50. You can see up there, that's a bigger level. So that is the bigger call wall to pay attention to if we get a push higher. But remember, if we're in positive gamma territory, dealers look to buy the dip, sell the rip. If we are in the negative gamma territory below that yellow line, dealers look to sell into selling, buy into buying, and so forth. So these levels become increasingly important as we approach them. If we take a look at the SPY on the 15-minute time frame, I'm not going to go too much into this. I applied that year-to-date anchored VWAP. Yeah, we had that break lower, but you can see the RSI early on in the trading session, or sorry, not early on, later on in the trading session, created a positive divergence where we had that lower low and the higher low on the RSI divergence. So as we're moving into the lower weekly expected move with the positive divergence, and it was already, sold off pretty significantly in the big mega cap names, that sounds like an area where you can potentially get a bounce. It's not an area where you want to take a short trade, right? And that's where we bounce and we close above the year-to-date anchored VWAP as it stands in this current moment, below the 5-day moving average. So below the 5-day moving average, okay? That means bearish, right? As it's neutralizing and kind of inclining, it's bearish with caution in my opinion still. And then when we look at the gamma exposure levels, we're right on it, technically positive. So this could be where we get a little bit more volatility. So be aware of that unless conditions obviously change. Now, I wanted to show another chart here, SPY on the daily time frame. Look, we've been on a monster run. So all we're seeing is a subtle pullback to start the year. Nothing crazy as it stands. All right. So we need to be aware because pullbacks, say if it pulls back, well, what if it rips up like this and we weren't prepared? Well, we need to be prepared for those type of things. So we got to look at key levels, and those key levels could be prior areas of resistance. So this prior area of resistance and we broke from it could be a potential area. So right around 460. And if price does make its way down to 460, this anchored VWAP from when the Fed kind of pivoted and we saw this blast up might come into confluence here, and that could be a potential level to watch. That if price sees strength after it, then we may have an opportunity to play a move higher to the all-time high, saying as if the all-time high isn't reached before reaching down there. And we have that negative divergence on the RSI, right? Price action moved higher, and the negative divergence is starting to somewhat play out as we had just that little down day in an overall pretty strong uptrend. Same with the Dow Jones Industrial Average. This one finished up today, but you can see a pretty massive negative divergence there. And this thing is like one heck of a move that's going to get digested, people. It's going to digest at some point. Like we went on a master run here before and we digested very small, but then we digested for quite some time, right? And then we went on another rally and then digested some more. And then we just went on this algorithmic, push higher. So there will come a time, as you can see, it could be soon as the MACD is starting to curl over. We have that negative divergence building there too as well. So just be mindful of that. If you even take it a step further and look at the bullish percent index, we have that negative divergence that's forming there. The action, the buy signal, the percent of stocks in the NASDAQ 100, the Dow Jones Industrial Averages on a buy signal is 80%. So it's pretty high reading. That goes higher. RSI goes lower. That's a negative divergence right there. And we still remain in that extreme greed state. And if you remember my prior video where I had this on the thumbnail, these photos of the extreme greed, typically this is where the market gets to and around digestion. We even paired it up with back month versus front month volatility. And when we come into this, over 20%, when back month is, over 20% above front month volatility, it's been areas, at least in the last year or so, this is where the yellow boxes where we were also in extreme greed states. So we combined the two, and you could see, price action went up, but then we went into a correction and went right here. We went into a little bit of a pullback. Right over here, obviously there's a lot of volatility then we went into the 2022 bear market. But also when we come into these higher readings, there's been multiple times that a very strong move, that's where it gets digested or pushed back. And we've seen that countless times. And what we're seeing right now is a period of digestion, something similar to what we saw right over there, okay? If this is the type of stuff you guys like, make sure to check out the swing trading community, $9 a month, where you can get additional content, or you can save annually. It ends up being like $7 a month. You just pay the year. It's like $90. This is where I'll list. And let me just tell you something. I tell this to, I barely bring this up because I don't know why. But there's a lot of stuff here. Now, if you sign up with Patreon, you got to sync your Discord up. Once you sync Discord, you have access to everything. And that's where I post, my entire watch list. And now I've been even including a tight list where I extract the names that are contracting and coiling up on a PDF document. Okay. So I do that. I give some trade ideas out, various ones. I do monthly expected moves, quarterly expected moves, weekly expected moves. I even give daily expected moves on the index products. Zones is something else that I share to give you more fractal look at the market. I've shared it a few times here. If you like some of my charts, the stock market indicator charts, I have permalinks to those. I have some educational videos that are already on YouTube that I just organized them on here. You have also the entire TradyTix bot suite where you can there's a query when you could type in things to do more stock research on, AI generated support and resistance levels. You can look at open interest. Various different zero date levels as far as options go. You can look at market net flow. There's so many different things you can type in. There's actually, if you look at the pinned comment for people that are already in there, if you look at the pinned comment, there's a help me file that walks you through all the different codes you can type in to get those charts for various different stocks, indexes, and so forth. There's a scalp bot that sends out little trade ideas, pretty short-term trade ideas. Those are based off of the strategy. It's called the Strat. You have the Bullseye bot, Trading Flow bot, large sweep bot, golden sweep, so options flow type of stuff. You have dark pool information and so forth being posted. And then you have access to the community as well. You could post whatever not whatever you want. You got to follow the guidelines, but the lounge where people hang out, memes, intraday trade ideas, swing trade stuff, whatever comes up in there, and then a book club. That's all I got for you on today's episode, everybody. Hope it helped out. See you later.